Look at this huge engulfing candle. This was on news when Google announced their earnings. Yes, they topped earnings estimates, but the stock sold off. Now, this is worse than it appears, as the stock was only down for the day 2.5%, or close to $2.75. Now, you got to remember, previous day price closed here. It opened higher. So again, from the close of the previous day to today's close, again, only down $2.75. So why did the stock pump and then crash? Well, that's what we're going to investigate. Before we continue with the analysis, doing a top multi-time frame analysis starting from the monthly, going down to the weekly and the daily, let's actually get into the news. So Wall Street posted better than expected first quarter earnings as the media giant was bolstered in large part by returns during the holiday period from its animated film Moana Part 2. Operating income from Disney's entertainment divisions, which folds into its television, streaming, and film studio, surged by 95% versus the year ago period to $1.7 billion. Analysts had seen the figure at $1.45 billion. Subscribers to its key streaming service also edged down by 1% versus the previous quarter to 124.6 million. Disney had previously said it would be hit by a slight decrease in subscribers in the wake of a planned price bump that took effect in October. Meanwhile, Disney's Experience division, which folds in its parks, cruises, and consumer products segments, registered operating income of $3.1 billion, a marginally year-over-year uptick of 0.2. Hurricanes in Florida, where the company has its Disney World theme park, impacted performance at the unit. Nevertheless, here's what CEO Bob Iger had to say. Our results this quarter demonstrate Disney's creative and financial strength as we advance the strategic initiatives set in motion over the past 2 years. All right. Now, getting back to the charts, you can kind of see as price was bumping higher, it was getting to that red zone in the form of resistance, support, resistance, resistance. However, now price finds itself somewhat in the middle of this range. And typically what you want to do, you want to play the extremes. That's where the hugest imbalance between buyers and sellers are. So yes, you got the dip. It's a no trade zone. Now if I open up the chart, see this drop, base rally, that would be a great opportunity to get long if and when price gets down there. We're going to call that weekly buyers at the $80 level. And if I go look at current price and I go up into the left, well, we probably got to go down to the daily chart. See if there's anything worth. And then the only thing I see is this rally in price, a couple of basic candles, and the drop. It's not ideal. Let's see if it's just reacting to something else to the left. Yeah, it's just reaction. Here was a nice level. Had a drop in price. Again, this is the daily chart. See that basic candle? How it nipped? That was a beautiful level that I didn't see. My eyes were gravitating to this level here at about that 135 level. But this is a valid level as well. Price nearly came into that zone again. All right, so let's scroll out. Let's conclude. Currently, price is in a no trade zone. However, you get out the white box, you can go short near 124. You can go long near $80. Thanks for watching. Subscribe, please. Like the video.